Good evening, good afternoon, good morning, whenever you are. This is another part of the Become cTrader Master webinar. And today, together with the TopFX, we are going to talk about the moving average. Um, the agenda of today's meeting is very, very tight, but I think you will find everything you need to know about the moving average and how to apply it, how to use it on the let's see the trader. So we are going to talk about what is the moving average indicator, why the moving average is popular among the forex traders, why it is a useful, very useful indicator for forex traders, how to use moving average in forex trading, and what's the difference between simple moving average and exponential moving average in forex. So let's go straight to the point. And as you can see right now on this on the screen, I got the euro dollar 1 hour chart with the Japanese candlesticks. We can zoom in a little bit without any problem. And as you can see at the bottom, I got the volume indicator. So let's talk about a little about what is the moving average indicator. So the moving average indicator is one of the most used technical indicators for forex traders, and generally it's a formula used to calculate the averages of the market's movements over a longer period of time. Usually works for a month or weeks or days rather than for the on intraday charts like daily, like sorry, 1 hour, 4 hour, or 12 hours. And this indicator is used to identify trends. Okay, so of course, identification is vital for the good forex trading strategy. So, why this indicator is popular among the forex traders? Well, moving averages are popular among the forex traders because of the indicator's ability to collect data from a specific time period into a like a kind of a bigger picture view of some sort of the some kind of the recognizable patterns and even trends. So arguably the most important part of the successful forex trading is the ability to foresee the way the market is going, which is where the moving averages could come in, right? So by finding out the averages, finding out the average price of a market and seeing how it's changing over time, forex traders can better predict what their next move would be. Another benefit of the moving average indicator is that if you want to calculate it manually, it's relatively easy to do compared to some other forex trading mathematical formulas and indicators. Well, this is because it's simply the average of a market's price over a certain period of time, and this also makes it fully customizable, so you can calculate the moving average of any time period or any market you want, right? So where is the moving average indicator here in our cTrader platform? So you go to the indicators. Basically, this is the indicator window, and you go to trend, because as I said, moving average is a trend indicator. So where you have to go is to go here, simple moving average. You click here, and as you can see, this window will open, and you can still change this moving average to time series moving average, triangular moving average, or weighted moving average. Okay, but we are going to concentrate now on simple moving average. The source of the price that it will be used to compute the moving average is the closing price. You can change it to open, high, low, or close. We will stick to the close because this is the most popular source of the data. And of course, there is the period indicator. So what I'm going to use is 100 periods indicator without any shift, okay, without any shift forward, without any shift backward. Okay, that line will be, let's say I will have it yellow. Okay, that simple moving average 100 periods moving average will be the yellow moving average. Okay, so this is the moving average on a 1-hour chart of the euro dollar. Okay, so as you can see right now, the market is sitting just directly on this moving average, 100 periods moving average. Okay, if I would like to see some bigger picture, what I go is the daily time frame chart. And um, as you can see, the platform automatically is showing me automatically the 100 days moving average in, of course, blue. So if I hover around this section here, it's even more and more visible. So as you can see, what do we have here on the chart is a very, very important situation. So what I'm going to show you is now how the traders are using actually the moving average indicator. Let me just, okay, let me just, there you go. This is what I wanted to do. I wanted to make it a little bit smaller. Well, there are at least 3 different ways to use the moving average in forex trading, but most commonly these methods focus on trying to find the current or upcoming trends in the forex market, right? This involves using the moving average lines, either the in form of the platform provided indicator, or plotting them manually. But who wants to do this in these times, right? So for example, you can use the single moving average like I do here, 100 periods moving average, yeah, on a chart like I do, to determine if the market is trending up. And that means if price is consistently above the single moving average line like here, or is the market trending down if the price is below the moving average line. And as you can see, since this breakout here that occurred on the 2021, this is the middle of the June 2021, the price stayed consecutively, right, just a few days, and then lower consecutively below the moving average. So we got a confirmation, or we got more likely an indication that this market, the market on the euro dollar on a daily time frame chart, has been moving in a downtrend since 16th of the June 2021 to well, that's 12th of the November 2022, because there is the breakout to the upside. Okay, and now the situation has changed. The market is trending up, so we are in the downtrend, in the uptrend. We are testing the moving average, so that means we are going lower towards the moving average, and then we bouncing again, and look, there's another higher high. Then we have some sort of the breakout, then we have some sort of the up movement, but no new high was made. So possibly this will be a period of some sort of the consolidation. Okay, so that's the most popular way to use the moving average, single moving average on the chart. Now, let me just give you some explanation about the simple moving average versus the exponential moving average, because you will find it very, very often in the literature, and you will find it very often very much confusing for you if you are using the moving average for the first time, or you are a beginner in this indicator. So basically, there are 2 main types of moving average indicators that are used in Forex. The simple moving average, which is called SMA, just the one we are using right now, the yellow one, and the exponential moving average, EMA. So the SMA is just the average price over the whole time period you want to factor in for that market. For example, as we have 100 days. Okay, to calculate it, you just add the closing prices of those 100 days and divide by total of 100, and there you go, you have the moving average. However, markets react to the news and current events and data releases and calendars forex candles and stuff like this, which can mean that the simple moving average can only give you half of the picture, because exponential moving average, which also calculate a market's average price, uh, but gives far more weight to the most recent price changes and less weight to the older ones. Okay, so if you want to put exponential moving average, you go here, you got the other uh, indicators, and um, you got so you got to you go to the trend, and you got the weighted moving average. And this is the close. And as you can see, if we even plot the same source, the close price, shift is 0, periods is 100, weighted moving average will be in blue. And you can see that's a kind of a different moving average, don't you say? Why? Because the formula to calculate the blue one, which is the exponential moving average or weighted moving average, is different than the formula to calculate the very simple moving average, the base moving average there is. Okay, so the basically the difference is that the weighted moving average pays more attention to the most recent price changes, and it pays less attention, or it gives less weight to the older price changes. Okay, so some of you might use the simple moving average, some of you might use the exponential moving average. Is all about the strategy you want to use it with. Okay, so let me just give you guys top 5 which is the most popular moving average strategies in the forex trading. Let me just briefly tell you what they are. So we got the single MA cross. Okay, so let me just the moving average like this. This is the single moving average, 100 days moving average. And the strategy is that every time a single moving average crosses, when the price crosses above the moving average, the trend is up. When the prices crosses below the moving average, the trend is down. The other very popular strategy to incorporate in your trading is the double moving average cross. So what we do is basically we add another simple moving average. Let's say we will have it in, I don't know, red or something like this. And we need to change the periods. So if our first moving average is 100 days, then what we want to do is to make it like 50 days. When we click apply, we can clearly see that double MA cross is actually something a little bit different than the strategy, than the single cross, because this strategy is designed to use 2 MA lines. Okay, one for the longer time frame and one for the short term, basically, right? So in this strategy, the longer MA line will give you a long view of that market's price, while the shorter, which is in our situation the red one, will showcase most recent changes in the pricing from things like, for example, the current events. Okay, so that's the briefly explanation how to use it in the forex trading. What else do we have is like the MACD. So MACD, let me just briefly show you this indicator. Basically, this indicator is, let me just apply it on the chart. MACD. Let's say we are going to use crossover, or we are going to use let's say crossover. So we are going to use crossover. We don't change any long cycle. We don't change any short cycle. Signal periods line stays like a 9, and we click OK. So default settings are right now on the chart. Let me just briefly explain to you how you can use the MACD strategy, which is one of the most popular ways to trade moving averages. Okay, so MACD is the moving average convergence divergence histogram, of course, and so that's the MACD name. And this is the indicator which is made up to the 2 exponential moving averages and the histogram. Okay, so exponential moving averages are again yellow and red, and the histogram is of course blue. What you are looking for with the MACD is either convergence, which means that two MI lines connect, basically, okay, or divergence, when the two MI lines pull away from each other, like for example in this situation, right? They are going sharply down, and then there's convergence, and then again they are getting away from each other. Basically, there's many different strategies within the MACD strategy. For example, you can use a crossover strategy when the fastest one crosses the slower one, for example. um, it's exactly the same as you will be using this on the chart as well. Or you can of course use the histogram, and in that situation you wait for the histogram to break below the level of the zero in order to adjust your strategy to the current market behavior. So those are the most popular strategies the moving averages is can be used for in the forex market. So as you can see, plenty of the scenarios can be made on different markets. It doesn't matter what market you are using for. We can use gold, for example. So when we switch straight onto the gold, we got again our MACD crossover. We got our moving averages. As you can see, there is the 15 days crossing the 100 days situation. Then they are getting away from each other. It's being, of course, seen here as well, especially here. And then, as you can see, we got very brief signal that there is again some kind of a divergence between this moving averages as the price goes lower. So basically, gold, basically forex markets, we can use it for the crypto CFDs as well. This is the Bitcoin to the US dollar daily time frame chart. As you can see, we have the moving averages on the chart, 100 days and 50 days, and we have the MACD histogram and the other moving averages as well on the bottom. So right now they're almost flattened. They're almost flattened here around the level of 20, I think 27, 28,000, somewhere like this. And it doesn't matter if this is a Bitcoin CFD, if this is Forex, if this is metals market, if this is any kind of a share, you can still use this moving averages in order to adjust your strategy to the current market conditions and to see whether you are trading during the uptrend or downtrend. So let me just sum up our today's meeting. Moving average is a popular technical indicator used by many forex traders on many markets on many different time frames. They are used to help traders recognize patterns and trends in the forex market. They can be plotted manually, but who wants to do this on a chart? However, of course, in the cTrader platform, you have the dedicated section of the trend indicators. One of them is simple moving average. There is more of that. There is a weighted moving average or exponential moving average, and the other more advanced moving averages. Maybe one day we will talk about this as well. Or you have, of course, the oscillators section when you can find the MACD crossover or MACD histogram as well, which is a part, which might be a part of a bigger strategy as well. While there are many strategies involving moving averages lines, there are few key moving average strategies for the beginner traders to know. As I said, the top most popular strategies for the beginner traders of the moving averages include the simple crossover strategy, double crossover strategy, the MACD strategy, or MACD crossover, and they can be again used on any market that you basically want on every time frame that you want to use them. So that's everything from me for today. Another successful webinar of the Become the cTrader Master had just been completed. I hope I will see you next time in another webinar, and we will still be talking about the most useful indicators for traders in the cTrader trading platform. Thank you very much for your time. Thank you very much for being with me for this short period of time. I hope I will see you guys again next time. So take care and bye bye.